I'd like to get your thoughts on the inflation numbers and how you think it could impact the markets going forward.
Firstly, thank you again for having me here. It's always a pleasure. Looking at the inflation numbers, it's becoming clear that Nigeria is dealing with rising inflationary pressures due to border closures, dollar scarcity, and low interest rates. Looking deeper, that 13.7% rise in inflation has been the highest since February 2018. And the way things are going, this will be the fifth year that inflation has been above target in Nigeria. Digging even deeper, we can see that especially with inflation, the major driver was food inflation, the jump in food inflation based on the disruptions created by COVID-19. So my conclusion to this is Nigeria is actually dealing with a cost-push inflation problem. In a perfect world, the best solution to this may be for the government to pursue deflationary fiscal measures, meaning more spending, higher taxes. But in reality, especially for Nigeria, this may not be a good idea because such could actually impact Nigeria's fragile recovery. Nigeria is still nursing those wounds, deep wounds inflicted from COVID-19. I think moving ahead, though, inflation in Nigeria is expected to rise based on the points above, but we have to keep in mind that the increase in VAT and the removal of the food subsidies also seem to push inflation higher. What does this mean for markets? Well, rising inflation hits investment, it creates uncertainty and it forces investors to be quite cautious. But looking at the Nigerian share oil index, oil share Nigeria Stock Exchange, it's actually it's actually risen 5% year to date, which is quite interesting because compared to the S&P 500, which is over 7% higher, and NASDAQ, which is around 25, 26 higher, Nigeria stock markets is one of the emerging markets that have performed well. But when I look more into this, I can see that especially in the fixed income market, there was a hunt for yield early in October when the CBN surprised us by cutting interest rates twice. In a nutshell, though, the fact is Nigeria is boasting low to negative yields in the fixed income market. So we have a case where investors are likely to park their cash in the stock markets, which are perceived as a good value compared to the fixed income market. Overall, though, if inflation continues to rise based on the factors discussed, that this may threaten Nigeria's economic recovery. We already know that Nigeria may be heading for a technical recession when the Q3 figures are released. And IMF have projected Nigeria to contract around 4.3%, but predictions are around 3 to 4.3%. So inflation is likely to remain the main theme moving forward all the way to 2021. And in regards to what the CBN and government can do, well, other countries are moving ahead to, unleashing heavy fiscal packages. We have to keep in mind that in Nigeria, the government spending or the spending was less than 0.5% of GDP. And the CBN has already enforced different tools this year and even cut interest rates. So when we look at the monetary policy toolbox, there's little the CBN can do. So we may see a case moving forward where the CBN just sits on its hand until things somewhat stabilize in the future.
All right, but when you look at how the markets are, though, looking at the equities and the fixed income, for investors, though, where would you think they will be looking to value with inflation at these levels?
Yeah, with inflation at these levels, I think investors are going to take a step back from the fixed income markets because, especially what we were saying earlier, with Nigeria's boasting low to negative yields, when we're looking at Nigerian stock markets, the banking sector looks quite interesting, but stock markets in general, especially, have been hit by COVID-19. So looking at local stocks, this could be an important, interesting destination for investors.
Right, because when you look at the equities market in Nigeria, though, as much as everyone thinks it's been down, when you look at the month-to-date performance, it's up about almost 10%. Year-to-date, it's up about 5.6%. Quite impressive when you look at compared to the counterparts in West Africa.
Certainly, for example, look at South Africa. South African stock markets have also been hit due to the impacts of COVID-19. I think when we want to zoom in and look at Nigeria, Nigeria's fared quite well compared to other markets across the world, but it doesn't change the fact that when we look at the global perspective, the fact that global growth still remains hit by COVID-19, we still have a lot of uncertainty, we have political risk in the United States, especially in Q4, uncertainty may remain the name of the game, and naturally, depending on the election outcome, this could hit appetite for emerging market assets. So in the short term, there could be more fluctuations in the Nigerian stock markets.
All right, but when you look at where to get value out of the equities market in Nigeria, for example, I'd like to get your take on what you think. How do you think the banks our investors should be looking at the banks?
Well, as you can see, we're in the case, especially, I'm going to zoom out from Nigeria, and right now, banks are, we're living in an era of low interest rates. Okay, the CBN has cut interest rates, but banks in general have been struggling to get income from the major driver, consumers and retailers, because low interest rates, that's where banks get most of their money. But when we look at big banks like JP Morgan and Goldman Sachs, they've been being able to get their money from trading. So I think there could be a possibility for Nigerian banks to get profit from trading volumes.